Hello everyone, this video is a revision video for all students of CA Final, old course as well as new course, for the subject of financial reporting, topic financial instruments. Financial instrument, one of the most looked after topic because A has a weightage of 15 to 20 marks both in new and old course. It is also one of those particular topics which does affects a lot of other chapters and is also one of the topics which is termed as the salt of Indies. In fact, इस topic को समझने के बाद ही you will be really able to appreciate all the other topics, and that is why I in my class take this topic, the first topic, just in fact after the schedule 3 discussion, what we do just to get an understanding of how Indies works. I have already shared one video on Indies 32 because you know Indies on financial instrument is basically divided into three Indies, which is 32, 109, 107. Where Indies 32 talks about presentation of financial statement. जिसके लिए already there are two videos which I have shared on YouTube, and if you look at these particular videos, this is what they should be looking like. So yeah, part 1 and part 2 where I've tried to simplify the financial instrument Indies 32 portion, which primarily once you see, you will get a good idea in terms of what I classify or what do I term as financial asset, what do I term as financial liability, what is equity instrument, what do I mean by financial instrument, certain specific terms like puttable financial instruments, proportionate share in net assets kind of assets, non-financial items, when non-financial items classified to be a financial instrument. In fact, when a contract of non-financial item could be a financial instrument contract, and other things like buyback accounting, a little bit about accounting for interest, dividends, and accounting with respect to equity. These two particular lectures will give you a complete idea about Indies 32. However, what we are going to discuss here is not Indies 32. That is something which we have already kind of covered. This video is on Indies 109, which is financial instruments, recognition and measurement. नाम से आपको समझ में आना चाहिए रिकॉग्निशन एंड मेजरमेंट का मतलब हो गया कि इनफैक्ट अकाउंटिंग पूरी की पूरी इस इंडेक्स में कवर होगी. Now when I talk about accounting for financial instruments, what do I mean? So you should have some basic idea about what do I mean by financial assets and liabilities. Basically Index 32 अगर मैं देखूं तो वो कहता है कि financial instrument is a contract that creates a financial asset for one party and a financial liability or equity instrument for another party. Which means there should be a contract and it should give rise to financial asset for one and a liability or equity for another. Plus please remember, हम accounting financial instrument की नहीं करते, हम accounting financial asset या financial liability की करते हैं. Equity की accounting बहुत ही limited prescribed है. 32 में 109 primarily financial asset और financial liability की बात करता है. तो फाइनेंशियल एसेट एसेंशियली फिर क्या हुआ, तो उसकी डेफिनेशन कहती है इट इज कैश इक्विटी इंस्ट्रूमेंट ऑफ अनदर एंटरप्राइज और अ कॉन्ट्रैक्ट टू रिसीव कैश और इक्विटी इंस्ट्रूमेंट ऑफ अनदर enterprise. Very briefly, if I talk about the definition, it also says a contract which involves an exchange of assets under conditions that are potentially favorable, which is like मैंने किसी से शर्त लगाई और मुझे पैसे मिलने की उम्मीद है, उसमें कैश मिलने की उम्मीद है, तो I could say that is also a type of financial asset. However, let's not get into those nitty-gritties because that Index 32 already kind of covers about. What I'm going to talk here about is the accounting aspect of these things. A financial asset की accounting कैसे होगी? तो before I start with my revision, I'll just give you some very basic inputs and quick tips so that you first understand and we are on same line so that we can interpret this particular revision video faster. I'm just going to be using only English in this because a lot of friends from certain parts of India, including South India, North and Eastern part of India, have requested for a complete revision in English language. So I assume that this is something which will be convenient for all the masses, and I will actually request that you please share your views whether this pure English language video or revision video lectures are fine with you. Accordingly, the next part I will kind of retune based on your inputs on it. So, talking about accounting for financial asset, एक financial asset की accounting में कैसे करूँगा, फाइनेंशियल लाइबिलिटी की अकाउंटिंग कैसे करूंगा, ये हमें 109 में समझना है. अब आप एक चीज़ समझो, फाइनेंशियल एसेट क्या है. मेरे पास कैश इन हैंड है, वो फाइनेंशियल एसेट है, डन. मेरे पास किसी कंपनी के इक्विटी शेयर्स है, वो भी एक फाइनेंशियल एसेट है, डन. मेरे पास एक कॉन्ट्रैक्ट है जिसके अंदर मुझे किसी से कैश या उसके इक्विटी शेयर्स मिलने हैं, तो वो भी मेरे लिए एक फाइनेंशियल एसेट है. इसका मतलब क्या हुआ, लेट्स से फॉर एग्जांपल, ओके, से फॉर एग्जांपल दिस इज ओके, ये मेरी तिजोरी है और इस तिजोरी से मैंने क्या किया, कुछ पैसे निकाले और ये पैसे निकाल के मैंने किसी को दे दिया था. से फॉर एग्जांपल मैंने, छोटी है अपनी तिजोरी ऐसे भी, तो ये मैंने क्या किया, आई हैव गिवन माई कैश टू अनदर पर्सन. अब भाई मैंने ये पैसा यहाँ से निकाल के इसको क्यों दिया? सी फॉर एग्जाम्पल इसके बदले में ये मुझे गुड्स देगा, तो से ही सेज दैट आई विल गिव यू गुड्स, आई वांट टू बाय दिस पर्टिकुलर थिंग, सो आई वांट टू बाय दिस पर्टिकुलर बुक, दैट्स व्हाई आई पेड दिस मनी। अभी इसने ये गुड्स मुझे दिए नहीं है, तो मैंने अपनी बुक्स में क्या दिखाना है? एडवांस टू सप्लायर। क्या ये फाइनेंशियल एसेट है? नहीं, बिकॉज दिस इज नॉट गिविंग मी अ राइट टू रिसीव कैश, तो इट्स अ कॉन्ट्रैक्चुअल राइट टू रिसीव कैश और इक्विटी इंस्ट्रूमेंट्स ऑफ अनदर एंटरप्राइज। आई हैव अ कॉन्ट्रैक्चुअल राइट टू रिसीव गुड्स which is not cash. Hence, the money which I have given to this particular person in my books I will show as advance to supplier, which is not a financial asset. 109 does not apply. However, I say you take this money and you give this money back to me after say 3 years. Why? Could be that I have given this money to this particular company which is the borrower, and against this it has given me a debenture. Debenture में क्या, चलो let's say for example ये पड़ा है मेरे पास, है ना, ये हमारा कर्फ्यू पास है, तो ये मुझे यूँ समझ लो एक सर्टिफिकेट इस तरह का मुझे इसने दे दिया, एंड दिस इज द सर्टिफिकेट विच आई हैव गॉट इन रिटर्न ऑफ एज अ कंसिडरेशन ऑफ दिस मनी विच आई हैव गिवन टू दिस पार्टी. Now in this particular certificate what do I get? So what am I getting is here this certificate is a debenture, let's say, and it says that I have right to receive a 10% interest on the money which I have given every year for next 3 years, and after 3 years I'll be getting back my 100 rupees, say for example what I have paid to him. So this instrument is nothing but actually you can say a contract consequential document which is giving me the right to receive interest for 3 years plus my principal back. मेरी बुक्स में मैं अकाउंटिंग क्या करूंगा? आई विल सिंपली credit bank 100 rupees what I have given to him, and I'll debit this investment in debentures 100 rupees. Now the question is, how do I account this 100 rupees of debentures in my books? Is it a financial asset? Yes. Why? Because this is giving me a right to receive cash. अब मुझे राइट टू रिसीव कैश मिला है, ये मेरे लिए डिबेंचर एक फाइनेंशियल एसेट है, तो मैं इसे बुक्स में अपने कैसे रिकॉर्ड करूँ? सर इसमें कौन सी बड़ी बात है? सिंपल 100 रुपये पे दिया है, 100 रुपये पे रिकॉर्ड करो, हर साल 10 रुपये का ब्याज मिलेगा, 10 रुपये के ब्याज को इनकम बुक कर देना। आफ्टर 3 years अगेन बैंक अकाउंट डेबिट टू आपका ये जो भी इन्वेस्टमेंट है ये क्रेडिट हो जाएगा एज एन एसेट। दैट्स अबाउट इट, दिस इज अ सिंपल अकाउंटिंग। ठीक है, बट नाउ लेट मी गिव यू सम व्हाट इफ्स। ओके, लेट्स से फॉर एग्जांपल ये जो डिबेंचर मुझे इससे मिला है, मैंने इसे दिए से फॉर एग्जांपल 100 रुपीज़, और इसने जो डिबेंचर मुझे दिया है ये दिया है ऑफ अ फेस वैल्यू ऑफ 110 रुपीज़। डिस्काउंट पे इशू हुआ डिबेंचर सर, हो सकते हैं क्या? हाँ, शेयर्स डिस्काउंट पे इशू नहीं हो सकते, डिबेंचर हो सकते हैं। मे बी इसको कुछ अर्जेंट नीड थी इसलिए इसने मुझे दे दिया फॉर वट एवर रीजन्स। तो फेस वैल्यू डिबेंचर की 110 है, तो सवाल ये है कि मैं इस डिबेंचर को अपनी बुक्स में इन्वेस्टमेंट कितने पे रिकॉर्ड करूँ? वन लॉजिक इज कॉस्ट विच इज़ 100, सेकेंड लॉजिक इज इसकी मार्केट वैल्यू विच इज़ ईदर 100 और से 110 द फेस वैल्यू। तो मैं क्या 110 पे रिकॉर्ड करूँ, और अगर 110 पे रिकॉर्ड किया तो कॉस्ट तो 100 ही लगी है, तो डिफरेंस 110 रुपीज़ का मेरा कहाँ जाएगा? दिस इज वन एस्पेक्ट ऑफ इट। दिस इज समथिंग विच इज बेसिकली टर्म्ड एज accounting for initial recognition. So this first discussion what we talk about is initial recognition किस particular value पे होगा किसी एक financial asset का। इस example में ये जो डिबेंचर किसी और कंपनी का मेरे पास आया है, और अगर initial recognition में कहता हूँ कि कॉस्ट पे नहीं होगा एंड लेट्स से फेयर वैल्यू पे होगा, और इस केस में फेस वैल्यू को फेयर वैल्यू 110 मानूं, मेरी कॉस्ट है 100 रुपीज़ की, तो इन दोनों का जो डिफरेंस है वो डिफरेंस की अकाउंटिंग कैसे होगी? दैट विल बी अनदर डिस्कशन विच आई हैव टू डू। दिस इज इनिशियल रिकग्निशन। नाउ लेट्स से फॉर एग्जांपल ऐसा कुछ भी नहीं था, आई सिंपली से कि 100 रुपीज़ का डिबेंचर मैंने 100 रुपीज़ में ले लिया है एंड इट्स 10% डिबेंचर, and this is basically repayable after 3 years at par है, issued at par है, redeemed at par है, सिंपल है। तो सिंपल सी बात है, मैं इसे 100 रुपये पे इनिशियली रिकॉर्ड कर लूँगा, और उसके बाद सवाल ये उठेगा कि 100 रुपये पे रिकॉर्ड करने के बाद व्हाट डू आई डू? से आफ्टर 1 year I get interest received of 10 rupees. However, I say the fair value of this debenture is 105. तो लेट्स से फॉर एग्जांपल कि अपने आप में क्या एक लिस्टेड डिबेंचर है, उसकी मार्केट वैल्यू 105 हो गई है। क्यों? मार्केट में कोरोना के कारण मार्केट रेट ऑफ इंटरेस्ट बहुत गिर गया और इस तरह के डिबेंचर अब 8% पे इशू हो रहे। तो ऑब्वियसली बात है, मुझे तो कंपनी फिक्स रेट ऑफ इंटरेस्ट का डिबेंचर है, 3 साल का है, तो मुझे 3 साल तक वो 10 रुपये देगी, तो मुझे मार्केट से ज़्यादा ब्याज मिलेगा। तो आज लोग मेरा डिबेंचर मुझसे फेस वैल्यू से ज़्यादा पे खरीदने को तैयार है, तो इसकी फेयर वैल्यू 105 हो गई है। अब अगला सवाल है, मैं इसे किस पे रिकॉर्ड करूँ? शुड आई रिकॉर्ड इट एट 105 और शुड आई कीप रिकॉर्डिंग इट एट 100 ओनली विच इज़ माई कॉस्ट और द इनिशियल कैरिंग अमाउंट? One logic to this particular answer could be that, sir, we should record it at what? We should ideally record it at 100 rupees only being cost. Why? We should not see the fair values at all because हमें बेचना तो है नहीं, इसको रखना है आखिरी तक। और मैं कहूँ कि अगर बेचना अच्छा पैसा मिल रहा है तो हो सकता है बेच भी देता, पर बेचा नहीं है, तो फिर क्या मैं इसे 105 पे लेके जाऊँ? आई डोंट नो सर, बट आई डोंट थिंक कंजर्वेटिज्म शुड प्रोहिबिट दिस. दैट मीन्स दिस इज अ क्वेश्चन ऑफ सब्सिक्वेंट measurement. When I say subsequent measurement, as in how to record on the reporting date these kind of financial assets. A simple thing could be that carry it at the carrying amount or the cost itself, and one could be that let's bring it at the fair values. And that is what brings us to our second discussion, which is known as SM, is what I say subsequent measurement. Whether subsequent measurement should be based on the cost. So should it be based on the cost approach, that is what was initially recorded, or should it be based on the fair value approach? And definitely if I go with the fair value approach, there is going to be a gain or loss. And when I say there's going to be a gain or loss, the question is where this gain loss should go. Should it go to PRL, or should it go to OCI, or should it go to reserves? In this index, there's no concept of bringing it to reserves. So we have two options, PRL or OCI, and within PRL or OCI, we have then two options. One is a reclassifiable OCI and another one is a non-reclassifiable OCI. यानी कि से फॉर एग्जांपल ईयर एंड पे अगर मैं 2 मिनट के लिए मानूं कि मैं इसे 105 पे लाऊंगा तो 5 रुपए का गेन पीआरएल में प्रॉफिट बुक कर दूं, या अदर कॉम्प्रिहेंसिव इनकम में 5 रुपए की मैं गेन बुक कर दूं. और अगर करूं तो रिक्लासिफाइबल या नॉन रिक्लासिफाइबल. आई एम श्योर यू नो रिक्लासिफाइबल मीन्स दैट लेटर ऑन यू विल गेट अ प्रॉफिट व्हेन you sell it. The 5 rupees of profit which you had recognized in OCI initially, you will transfer it back to your PRL. And if I say that is non-reclassifiable, so when I sell it, I simply transfer OCI balance to reserve. For this, there's another revision video which I've shared on Ind AS, which is what you can see, and you can basically get an understanding of what this particular concept means. But I'm sure you might have studied financial instruments or Ind AS earlier, so you know this. Achha, do remember that these revision videos are not specifically made for my own students, and that is the reason I'm just taking these particular basics so that it is having a mass relevance and everybody can actually have a look at it. And get the most out of it. So what I'm saying is the question is ki, should I record it at 105, and if yes, what should I do with the profit? And then obviously one particular day I will either actually redeem it, or some way or the other I might sell it. So that means derecognition, and what happens with the derecognition, gain or loss. Now the interesting part here is derecognition का gain or loss इस standard में हमेशा PRL में जाएगा. इनिशियल रिकॉग्निशन हमेशा फेयर वैल्यू पे होगा. हमेशा का मतलब देयर वुड बी सम एक्सेप्शंस टू इट, प्राइमरली व्हेन अदर इंडेस अप्लाइज लाइक 115 में क्रेडिट सेल्स की है तो जो डेटर है वो भी एक फाइनेंशियल एसेट है, बट उसकी इनिशियल रिकॉग्निशन वैल्यू वुड बी द ट्रांजैक्शन प्राइस एज पर 115. वील कम टू दैट एस्पेक्ट लेटर ऑन, बट यूजुअली इट विल बी फेयर वैल्यू. हियर इट विल बी पीआरएल. हाउएवर हियर इट कुड बी कॉस्ट अप्रोच आल्सो और फेयर वैल्यू अप्रोच आल्सो. इसका मतलब आपको एक चीज समझ में आ गई शायद कि किसी पर्टिकुलर फाइनेंशियल इंस्ट्रूमेंट का, इन दिस एग्जांपल दिस डिबेंचर व्हिच आई हैव, इसकी अकाउंटिंग इनिशियली और सेल के समय डी रिकॉग्निशन के समय क्या होगी, दिस इज मोर और लेस गोइंग टू रिमेन सेम इन एवरी केस. व्हाट इज गोइंग टू चेंज इज बेसिकली द ईयर एंड ऑफ द रिपोर्टिंग डेट, दैट मींस द सब्सिक्वेंट मेजरमेंट. Either it will be continuing at cost or it will be measured at fair value, and in fair value whether the profit or loss will go to PRL or it will go to OCI. And these particular methods in this particular standard are termed as ACM, amortized cost method, PRL, which is termed as FVTPL, fair value through profit or loss method, and these two methods are known as FVTOCI or FVOCI, which is fair value through other comprehensive income, जिसे मैं कहता हूँ FVOCI R and FVOCINR, which is reclassifiable or non-reclassifiable. Now the question basically arises is which amongst this is I have to choose, and this choice is not up to you purely, it depends on certain rules and logics. This is the first thing which you need to understand. इस particular debenture investment को मैं मेरी books में किस पर value करूँगा at the end of the year is what the question is. And this primarily depends on two things. One is my nature of business, and the second thing is the nature of this particular instrument. I repeat, my nature of business and the nature of this particular instrument. Quick tips. First, see the nature of this particular instrument. Tell me one thing, is this particular instrument something? In fact, forget it. Let me, kind of not teach you the index. Let me help you, in fact, give you some tips, and in fact, अपन डिस्कस करते हैं ना, एक काम करते हैं किसी तरह से इंडेक्स बनाने की कोशिश करते हैं rather than पढ़ने की. मुझे एक बात बताओ, आप कोई चीज़ खरीदते हो तो आपको उसकी मार्केट वैल्यू में इंटरेस्ट कब होगा? जब आप उस चीज़ को आखिरी तक, when you buy something, when will you be interested in the market value of it? When you are going to keep it, hold it till the end, or when you are going to even liquidate it before that if you get a good return? And that precisely brings me to the question of what is your business? Is your business model to hold this till maturity? If the answer is yes, then in that case you can use cost method. If your business model is not to hold till maturity, that means either you trade frequently in this, or you might trade, or you might hold. You're not sure about it. You in fact do both the things. In fact, that is your business model. Being opportunistic. What matters to me is nothing except money. So I have one principle in life, which is what money matters. Everything else is something which is a derivative of it. So derivative ये भी आएगा. But anyways, what I'm trying to say in this particular situation is that अगर आपका business model purely अपने इस particular इंस्ट्रूमेंट को आखिरी तक होल्ड करने का है और आप उससे सिर्फ प्रिंसिपल लेना चाहते हैं, इसका मतलब यू आर एक्चुअली नॉट इंटरेस्टेड इन एनी फैंसीज. अपने जीवन में एज सच हम क्या हैं, हमें कोई रोमांच वोमांच नहीं चाहिए भैया. सिंपल डिवेंचर है, 10% इंटरेस्ट है. आई जस्ट वांट माय इंटरेस्ट एंड प्रिंसिपल बैक. That is what my objective of the business is. Business model is just to hold it till maturity. If that is the case, you can go with cost model. If that is not the case, the cost model is never ever available to you. So cost model is only available to those set of entities whose business model is to hold to maturity. And when I say to hold to maturity, it also means what should be the nature of the financial instrument. The financial instrument should also have a nature that it has a maturity. So the second question is, my choice of method depends on two things. One is what is my business model, and second, what is the nature of the instrument. The nature of the instrument should be such that the instrument is basically having specified contractual cash flows that simply, or you can solely represents payment of principal and interest. Solely for payment of principal and interest, which is basically also termed as the SPPI test. So I have two tests. One is known as the business model test, and second one is known as the SPPI test. This is instrument specific, and the business model test is entity specific. If the nature of the instrument is such that it does satisfies the SPPI test, which is the instrument is solely and solely for payment of principal and interest. That's about it. Normally इस टेस्ट को प्रूव करने के लिए आप इसे इशूअर के पॉइंट ऑफ व्यू से देखो कि इशूअर ने जो इंस्ट्रूमेंट इशू किया है वो इंस्ट्रूमेंट में अल्टीमेटली क्या सिर्फ वो प्रिंसिपल और ब्याज देने वाला है. सिमिलरली होल्डर क्या इस इंस्ट्रूमेंट से प्राइमरली सिर्फ प्रिंसिपल और ब्याज लेने वाला है. इफ दैट इज द केस, इट सैटिस्फाइज द एसपीपीआई टेस्ट. इसका मतलब क्या है, आप एक चीज समझो. इफ यू आर रनिंग अ बिजनेस एंड दिस पर्टिकुलर बिजनेस यू आर हैविंग अ गवर्नमेंट कंपनी व्हिच इज इनटू टेलीकॉम सेक्टर एंड यू हैव सम सरप्लस फंड्स एंड यू वांट टू इन्वेस्ट इट. व्हाई विल यू इन्वेस्ट? विल यू इन्वेस्ट इट इन इक्विटी मार्केट टू बेसिकली टेक्स द बेनिफिट एंड द एडवांटेजेस ऑफ द अप्स एंड डाउन्स? नो. अब तो डाउन्स के एडवांटेज होंगे, अप्स के तो बचे नहीं. But nevertheless, you will not be doing that. What you will rather be doing is you will invest in some government securities or safe investments where the risk is almost negligible and you get a fixed rate of return, because that's not your core business to invest and make money out of it. And that is precisely when you say that you will invest in instruments like debentures, corporate bonds, fixed deposits, national savings certificates, government securities. All these securities, all these investments have one common thing, that they are solely made for payment of a principal and an interest on it. And that is why they satisfy the SPPI test. So instrument satisfies the SPPI test and the business model is to hold to maturity. Then in that case you have the cost method. Otherwise in every other case you have to use some or the other fair value method. Which fair value method to use? If your business is to trade, irrespective of the nature of instrument, you have to use FVTPL. That means fair value through profit or loss. And if you say that your business model is actually to hold or sell, then in that case you can use FVOCI, which is fair value through other comprehensive income. However, the Ind AS also specifies that in case of the nature of the instrument is not solely for payment of principal and interest, like an equity instrument. So if I have given my money, so say for example I had some more money in my tijori and So I put out, I took out some more money, and instead of what I did is I gave this particular money, and against this particular money I got some equity shares. And what equity shares है क्या भाई अपने पास कुछ? So let's say for example, okay, so this is an equity saving certificate. So I got this. तो मैंने ये पैसे दिए और मैंने पैसे देके बदले में इस कंपनी को ये पैसा दिया और इस कंपनी से मैंने बदले में क्या किया, इसके इक्विटी शेयर्स ले लिए. अब ये एक सर्टिफिकेट है. इस इक्विटी शेयर्स में आप मुझे बताओ क्या ये इक्विटी शेयर खरीदने का मेरा प्योर ऑब्जेक्टिव, would the objective of buying this equity share solely and solely be just to get interest and principal recovered out of this investment? No, because I am actually wanting to share profits of this particular company, which could give me greater than interest returns, high risk, high return securities. That means this instrument does not satisfy the SPPI test. So I have this and I have a redeemable debenture. This satisfies the SPPI test, this does not. This is not satisfying the SPPI test because this is not purely giving me principal and interest, and that is why such investments will never be measured at cost, and for this there is only one method, which is FVTPL. Now when I say FVTPL, there is a problem. 100 rupees investment if it goes to 105. Now let's understand. So say for example I bought a particular instrument on say 1st of March and I bought it for 100 rupees. This is actually the initial value. Say on 31st March, which is my balance sheet date, let's say this zoomed up to 120. And then on 10th of April, I actually sold this off. And this say was sold at 115. Now what do I say? Do I say I made a profit of 20? And then I incurred a loss of 5? Or I simply say I actually made a profit of 15 when I sold it, that means in the next year. Ideally, persons who trade will rather say that I made a profit initially of 20, but I made a loss of 5 in the next year, because they will measure their performance. In fact, they made a very good investment in the previous year, ending March year, because they actually got a 1 month 20% gain on it. But actually, they didn't sell it in the right point of time. That is when the next year they had to sell it 5 rupees below its peak price, which was at 31st March. This presentation, if you show 20 profit in the previous year and 5 loss in the current year, this gives the right presentation of an investment company as to how its investment division has been doing in the previous and the current year. And that is why what is most appropriate in this particular case is that you should actually use FVTPL, which is you should measure on 31st March, subsequent measurement at 120, 20 rupees profit transferred to PRL. Next year 5 rupees loss transferred to PRL. But a company may say that this is leading to booking of unrealized profit. Doesn't matter, because in any particular case, when you are distributing dividends, your section 123 say unrealized profit will not be available for distribution of dividends. So dividend point of view, say it will not really create too much of an impact, but yes, your profitability will increase, your EPS would increase. So company will say that I don't really want to increase my EPS due to such unrealized profits. There could have been losses as well. And conservatism does not definitely apply. This index is not based on those particular principles of conservatism, for the very simple logic, because when you make investments, a lot of investment will be under gain and losses. So you cannot just say I will book loss, 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 and not profit, profit, profits. So for all these particular matters, what has been given is you have an option that if you really don't want an FVTPL thing when SPPI test is not met, like in investment in equity instrument, then you have an option that you can go for FVOCI, but then you'll have to go with FVOCI NR, non-reclassifiable, which means the gain or loss, whatever it is, you'll have to transfer it to OCI non-reclassifiable. And subsequently, when you sell this particular investment, so if this was FVOCI NR, 20 rupees of profit will go to OCI NR, non-reclassifiable. Next year, you will have to book a loss of 5 rupees. And apart from that, you will actually have to not have the option of reclassifying the 20 rupees of profit which you booked earlier in OCI to PRL. In fact, that will directly get transferred to reserves in SOKI, which is statement of changes in equity. Because this is FVOCI-NR. This is only applicable for equity instruments. However, let's talk about this debenture instrument. This is more interesting because this has more possibilities. So I took a debt instrument, which is basically what, 10% debenture, 3 years at par redeemable, at par issued, and interest of 10% per annum payable every year. First year and the fair value became 105. Here now 1. Let's talk about the instrument. Is this instrument giving me purely principal and interest? Yes. Second, is my intention, now let me come from the entity's perspective. Is my intention to hold it till maturity? Yes. Then I'll carry it at cost. So 100, 100, 100 is what it will be carried at. But second, say for example, I say that my intention is to trade in this. I will trade it. Whenever the value increases, I'll sell it off because it's a listed debenture. Then I will go with FVTPL. But I say I'm not sure with my particular business model. In fact, I'm sure with my business model, but my business model says that, whatever is advantageous, do that. You may hold it till maturity, you may not hold it, you may not trade it, you may hold it, you may not hold it, you may trade it. And in such cases, the index says that it is better that in such cases, since it is satisfying the SPPI test, that means there is a possibility you may hold it till the maturity, because the nature of the instrument is such that it is giving principal and interest. So you will hold it till maturity. There's a possibility, but you're not sure. So you take this profit or loss to OCI, but into reclassifiable. Reclassifiable means when you sell it, the reclassifiable profit or loss will get retransferred from OCI to PRL. And this is the way you will have to choose one of these particular methods. So principally you can say there are just two approaches, cost or fair value. But methods you could say there are more than two, which could be fair value through PRL or fair value through OCI and cost method. And fair value through OCI could be non-reclassifiable or reclassifiable. Please remember all these discussions, what we are doing is from the financial asset perspective, financial liability perspective. Usually we go with only the cost method, and only in rare circumstances we'll use fair value through profit or loss FVTPL method, which is primarily for financial guarantee, accounting mismatch and certain situations. So my discussion here is actually basically what, please understand, my whole discussion here in this 109 at a initial point of initial standpoint would be my whole discussion, I would say, at the initial standpoint would be, excuse me, to first identify as to which method is applicable and then understand all these methods in terms of how these methods work like. Because it's going not to be very, very simple as to how to understand these methods. Because here, let's say, for example, in this case, what is the cost? 100 rupees is the cost. But what if this debenture were issued at par? Say, for example, they were issued at discount or at a premium, or say, for example, there was some cost involved, like an agent commission or stamp duty or some charges, which we call as the transaction cost. Then what do? What if the debenture was a variable interest rate debenture, wherein I was getting a rate which was linked to the RBI repo rates and a spread above it? So definitely, even in cost method, I'll have so many of the other probabilities. Could there be an impairment? I subscribe to these particular debentures of a bank, let's say, for example, a Yes Bank or a Punjab Maharashtra Cooperative Bank. Then in that case, what happens in those situations? Or these deposits belong to these banks. So can there be an impairment? So there'll be a lot of complications which will come in. Not going to be very simple, even the cost method. And then fair value again, how do I get the fair value? What do I mean by fair value? There could be multiple fair values. How do I calculate those things? And what is the frequency of fair valuation? How do I do my accounting entries and stuff like that? Ye pura discussion, all this is something which is going to affect your subsequent measurement kind of a discussion. Initial recognition, you'll be surprised to know, is always at fair value. And this is actually a big deal of discussion, because please understand, when you buy a fixed asset, a property, plant, equipment, you always initially record it at cost. So you buy 100 rupees of land at, let's say, for example, I say that, okay, cool. What I say is land purchased, let's say at 100 rupees. At what price would you record it? I would simply say land account debit to bank. 100 रुपये में ज़मीन आ गई sir. Come on. Example. That's about it. What if I say that the fair value of this particular land was 120 rupees? But I bought it at 100 only because it was a distress sale of seller. So seller actually was under distress liquidity crunch, so 120 की चीज 120 thing, it sold off immediately to me at 100 rupees. I made a gain of 20 rupees. Do I recognize this gain of 20 rupees initially? No, I simply record my land at cost, because Ind AS 16 says initially all property, plant, equipment or intangible assets should be recognized at cost. However, if this was a business combination transaction wherein I bought a particular business which includes a land for which I have given a PC of 100 rupees, but the fair value of the land is 120, in that case I would have valued this land at 120 rupees and not 100 rupees being fair value, because Ind AS 103 business combination requires that. In fact, Ind AS 16, Ind AS 38 intangible assets, Ind AS 16 PP also says business combination acquired assets initially should be recognized at the fair value. And there is a question in November 2019 CA final new course paper on this particular matter, which the institute has solved in the suggested answer inappropriately, and I have raised a query on that, and there is a YouTube video also which I have posted. Do watch that particular thing. And I have questioned the suggested answer of the institute. I have also written a mail to them. I have not yet received any particular response from them. I do hope that I will get a response, and we will make sure that we do get a response on it. But it is surprising that paper check hone tak ki बात सही हो रही है या गलत, that is one another aspect. But what I'm saying is the basis of checking the whole paper, that means the suggested answer, which may not be the basis, it would be the marking scheme, but I'm assuming that the suggested answer and marking scheme will not be conceptually different. And there is a question in terms of the suggested answer, and it's a 8-mark question which they have given. The suggested answer to my mind is not correct, and I have raised a question on that. I have put a YouTube video on it, and I'm really surprised as to how they have solved it. They have solved it using some old concepts which were there in accounting standard 26 on intangible asset, which is no way applicable in India's. And I'm really surprised how could they have solved it like this. So in any particular case, once I get a response on that, I'll share a view in terms of what the institute view is and what should be the way forward. And mm, things apart, coming on to this particular aspect, business combination, I would have recorded at 120 and capital reserve of 20, but in case of a normal purchase acquisition of this particular asset, I would have recorded this at 100. Now my question to you is, if it was a business combination, 120 and then 20 would go to capital reserve or reduced from goodwill. Now here, if I talk about the fact that this is actually not, say for example, a land, and I say that instead of a land, I have purchased a financial asset. A financial asset. Then what do I record it? India says this financial asset initially will always be recorded at fair value. But I have paid a cost of 100 and the fair value is 20. So what happens to the difference 20 is the first thing which you need to discuss, and the India says what. And this is something which is very surprising because it is very much required, because India says that we want financial instruments to be recognized at fair values usually, unless there are some exceptions which we'll come to, because for the very simple reason is that these are financial asset, which means I have given some money to you. What is the value of this particular money? The money which I have given to you is the fair value of this particular contract. That's about it. Finish. So the value should be the same. If it is not the same, that means there's something else which is going behind this. You need to identify, which means what? So I gave you 100 rupees as a security deposit. Let's say, for example, आपको fast की franchisee लेना है. So you want a fast franchisee in your city. So you said that, okay, sir, we want to take a franchisee. And I said, okay, there's a small security deposit which you'll have to pay. He says, okay, what's the money? And I say, let's say, for example, you have to pay me 100 rupees as a security deposit. So what you do is you give me 100 rupees as a security deposit. 3 years contract I enter into, and after 3 years, I'll be returning this 100 rupees back to you. You say, what about interest on this 100 rupees? I say, this is interest-free security deposit, boss, which you will have to give it to me, and I'll turn it as it is back to you. You know, you have given caution money in the school. You don't get interest on it. And you remembered everything, and you said, हाँ sir, caution money तो अभी तक निकला भी नहीं है school से. Anyways, so you agreed and you said, okay, fine, that's okay, and I'll give you 100 rupees security deposit. Now, please understand, for you, it is a financial asset because you've given me the money and you have the right to receive the cash back. For me, it's a financial liability. Now, at what price would you record this particular thing initially? So the cost is 100, but the fair value is not 100, because you will be getting 3 years later 100 rupees, and you know 100 rupees given 3 years later is not equal to 100 rupees today. So if I discount it when my cost of capital, the present value, say for example, if I discounted it 10%, should come to around what? So let's say for example 100 rupees discounted by 10% for 3 years, the present value should come to 75. That means for you the fair value of this is just 75 rupees. So you've given me 100 rupees, but the worth is 75. 25 is a sacrifice of interest which you have suffered. Why? Because you have taken a franchisee for me. So that means that 25 of sacrifice are actually a type of franchisee fees. You should actually recognize in your books debit franchisee fees or deferred franchisee fees. 25, which is a type of a deferred cost for you, and you should debit the financial asset 75 rupees, and then you should credit bank with 100 rupees. That means you've recorded the financial asset at fair value. For me, who has accepted the security deposit, for me this is a financial liability. I will also record it at fair value, and because I have to pay 100 rupees not today, 3 years later, for me also the fair value is 75. So 25 is a franchisee fees which I have recorded from you in advance. I could say, and I will book this franchisee fees as an income over the period of next 3 years, or maybe as per Ind AS 115 or the respective standard whatsoever becomes applicable on this. So what I'm trying to say in this particular case is everything initially is recorded at fair value, and this is something where now I really start with my revision, because here till now what I've done is I've just given you some inputs and tidbits just to give you an understanding about what exactly the financial instrument thing is all about. And now we'll be referring to this particular book. In case if you're my student, have this particular book, just keep this open and just refer it during the revision videos. If you're not, just concentrate on the screen. I'll be scrolling over the pages so that you can definitely see in terms of what I'm explaining here, and then you can follow those particular instructions. And at the same point of time, please understand, if you really want to buy this particular book for your own revision senses, because that'll be very handy and useful for you for exam time to time, then in that case you can order it at a website which is fast.edu.in, and you can place an order there. However, we're not dispatching it now. We are only sharing the digital notes, and the dispatch will only happen once the lockdown is over. So this is what we call as the Brahmastra. Brahmastra, I I'll show you the index. This basically covers introduction, Ind AS based financial statement, schedule 3. Presentation of financial statement in days 1. ये जो मैं पहले क्लास में पढ़ाता हूँ just to get a basic understanding of it, because I understand student coming from intermediate has been studying accounting standard and the old format of the balance sheet in schedule 3 division 1 all throughout. Now this is schedule 3 division 2, which is altogether a different format where assets come in first and not equity and liabilities. So in that sense you need to first understand, then you come to financial instrument, despite it is one of the trickiest and the toughest topic. But I believe class mein initially you do most toughest and the trickiest of the topics, then you're fine, because then you have done the, it's like eating the frog. You've done the most difficult thing at the first, and then what you're left with is comparatively the simpler things. And this is something which really develops a core understanding of the whole chapter. So financial instrument, consolidation, business combination, and share-based payment. I will quickly jump to financial instrument. Financial instrument in days 32 is something which I've already shared on YouTube. I just showed you the videos. You can look at those particular videos there. And then, sorry, this is consolidation. This is financial instrument 109, what we are now discussing. So now I'll give you a quick tidbit in terms of what all things we'll be covering in the revision video. And this is also the way I actually cover these particular things in the class. So you can just have a quick look first. You need to understand what should be the accounting method first. Initial recognition, you don't need to understand the method, but for subsequent measurement. But we need to first understand this logic to move ahead. There are primarily two methods. One is the cost-based approach, which is known as the amortized cost method. And fair value, you have basically two methods, FVTPL and FVOCI, which is R or NR. Now, when we talk about which of these methods to be used, so Ind AS 109 says that this discussion of which method to be used for financial asset or a financial liability, this is something similar to what we have discussed. Depends on two things. One is the business model test and the SPPI test, which I just told you is explained here. Yeah, initial pages I'll be sharing on the fast.edu.in download section of the notes, where you can download these initial pages and go through it so that you'll get a textual understanding of it. But in the revision, I'm actually not reading through it. This is a mind map which is given in the institute module, but this is a mind map which I have alternatively developed, which is more easier for me to understand. And I think student also they find it more easy to kind of keep it in their heads. What I say is, when you make a choice of the method, just simply remember first, what is the nature of this instrument? Will this instrument give you purely principal and interest? If the answer is no, cost method is ruled out. You have to use FVTPL only, except if you want, you have the option to use FVOCI, but that'll be non-reclassifiable, and irrevocable option, you'll have to keep using that particular method itself all throughout the period. So SPPI test not satisfied, use FVTPL. If it is satisfied, then you see what is the entity's business model. Is it to hold only? Oh yes, it is to hold only. Then use ACM. It is to hold only or sell, then you can go with FVOCI-R. If it is to trade, then you have to go with FVTPL. But remember, in these two cases, you also have the option to go to FVTPL, because Ind AS always allows that you can use FVTPL as an option if you want to. All these options are to be exercised initially, and these are instrument to instrument specific option, and you don't have to take these options collectively for all categories of instrument. These are some examples we should be definitely going through, despite the fact it's a revision video, so just to get a complete good understanding of it. What it says is that let's say I have a 12% redeemable debenture. Now, redeemable debenture and a fixed interest, that means it will satisfy the SPPI test. And since it satisfies the solely for payment of principal and interest test, it means the ACM option will be available provided the business model is to hold only. But if the business model is not to hold only, it is to sell or trade only, then FVTPL. If it is to hold or sell either or of it, then in that particular case, I will go with FVOCI. But in ACM or FVOCI-R, I have option of FVTPL. So let's see. 12% debenture, 12% debenture, 12% debenture. SPPI test, whether it will pass. In all these cases, it is yes. If your business model is to hold, then you will use ACM. If it is to hold or sell, use OCI-R. If it is to trade, use FVTPL. You don't have an alternative choice of method, except there is a star that in every particular case, FVTPL option is available with you. But if it is a 12% convertible debenture, it's interesting. Then what happens? So please understand, 12% convertible debentures. This may I will not be getting on the due date cash. I'll be getting equity shares. Please understand. Then the person who is buying this is not just getting pre-specified contractual cash flows of interest and principal. He's getting interest which is pre-specified in the contract, but he is not getting the principal. In fact, he's getting equity share, which value will be keep on fluctuating. Hence, you may get a gain or a loss out of it. So that means that this is not something which you are buying because you are just interested in interest. Dekho, logic kya hai? I'll just give you the logic. Logic is, If you're only interested in principal and interest, that means your money back with an interest, then you would have taken an FD or a redeemable debenture or something which gives you your principal and interest back. In these cases, you can avoid the fair values. But if you're buying something wherein you will be getting equity shares, definitely you'll be interested in the market value of the equity shares, because the way it goes up and down, it'll actually change your heartbeats, because you will feel a sense of profit or loss. In such cases, going with the cost method may not be appropriate, because a company buying such particular type of debentures is really interested in the fair valuation of it. That is why you have to use fair value method. In such cases, you have to use, because SPPI test is not met, you have to use FETPL, except you have the option that initially itself you can use FEOCI but NR, and this is an irrevocable option, you cannot change it later on. So SPPI 12% convertible debenture, whether your method is to hold or it is to hold or sell or trade, in all cases you will have only FETPL or FETPL option. However, here you have a choice of FEOCI NR, but not in case where you are intending to trade. So please understand, anything which gives you simple logic here. I have grown up and my age does not permit me to take risk. I want an instrument which gives me a fixed return. These kind of returns usually will meet the SPPI test. तो सर सिंपली आप ये बोल दो ना फिक्स्ड इंटरेस्ट रेट बॉन्ड और डिबेंचर आई विल नॉट से दैट बिकॉज if you say that I have taken a bond which gives me a variable rate of interest where the variable rate is directly linked with the RBI repo rates, then that also is basically giving me market rates of interest. So that is also satisfying the SPPI test. But if I take an instrument which will give me my principal back and during the tenure will give me interest which is linked to the change in the gold index, definitely the one who's buying is not really interested in a fixed principal and interest return on its investment. In fact, it is interested in the returns which you usually get in a commodity like gold. And that means this instrument what you have bought is not purely for interest and principal, but to speculative nature of gain is what you're interested in. It's a risky investment, simple said. That is why this will not satisfy the SPPI test. So a debenture or a bond which gives you a fixed rate of interest could be satisfying the SPPI test. Giving variable, but a variable linked to, let's say, for example, inflation rate, or linked to, let's say, for example, the repo rate, RBI rate, bank rate. Again, these could be satisfying the SPPI test, but linked a variable interest rate where the base rate is linked to equity index or a gold bullion index will definitely not meet the SPPI test. I hope you're understanding what I'm saying. So based on this, you first identify what is the nature of this particular instrument and what is the model of the entity. These two things will help you to decide the method, which will help you on the subsequent measurement thing. However, initial recognition in every particular case of financial asset or liability will be done at fair value only. Where will the gain or loss go? So you remember two things here. One, you will record it at fair value and the gain or loss will be transferred to PRL if the fair value is based on level 1 input as per Ind AS 113. Fair value means fair value measurement in days 113 says fair value is the price at which an asset could be sold or a liability could be settled in an orderly transaction between market participants. That means in a market which has active number of buyers and sellers who are regularly trading and dealing in those assets and liabilities or securities. So in such a market where you are able to sell the price, which is a market price like a stock exchange, where the price is actually something which is not manipulative because it's an active market price, so one cannot really manipulate it. So that is if the basis of fair value, then the difference of fair value and your cost will be transferred to PRL. However, if your fair value is based on any other input like a unlisted company share value determined based on the net assets or based on the EPS into price earning ratio, which is not purely based on available market prices and is a derived value, then in that case the difference will be accounted as per respective Ind AS, which could be Ind AS 115 revenue or leases Ind AS 116, because when you see the lectures of lease in the last lecture I've talked about interest free security deposit in a lease contract, how to account for those cases. Those questions are there in the study material which will marginally change now because of 116 coming into picture, because the institute had given the solution in Ind AS 109 of those particular questions as per Ind AS 109 when Ind AS 116 was not in picture. Anyway, so what I'm saying is that if the fair value is based on level 1 input, which is active market price, you can say for understanding, then difference goes to PRL. If it is any other input, then it depends on the respective Ind AS. This is one. Second, initial recognition, you might have incurred some transaction cost. What is transaction cost? It is directly attributable cost, directly attributable to the purchase. That means if you would not have purchased that particular asset, that cost would not have incurred. That means if I bought a debenture and I have basically paid a commission to an agent for buying that debenture, then in that case, this agent commission I would not have paid if I have not had bought the debenture. So I will say it is an initial direct cost. or a transaction cost. But if I say that I have basically paid a money to a researcher who has given me a research based on which I have purchased this particular debenture, whether I would have purchased the debenture or not, I would have made that payment to that particular person. That means this particular money which I paid is actually not directly attributable, and hence this is not a transaction cost that will go to PRL in every case. If it is directly attributable, it qualifies to be a transaction cost. Transaction cost under two methods. So transaction cost accounting is dependent on the choice of method which we are now going to discuss for subsequent measurement. And if it is based on FVTPL, transaction cost goes to PRL. If it is based on ACM or FVOCI, it will be adjusted from the initial recognized value. That means the carrying amount initially would be fair value plus minus transaction cost. Why so? FVTPL, if you increase the cost, any which ways when you bring it to fair value, gain or loss will go to PRL. But FVOCI, if you do not increase the cost and book the transaction cost to PRL, subsequently when there is a gain, the gain will not go to PRL, it will go to OCI. So you are booking an expense in PRL and you are booking a gain in OCI, which is a mismatch. So I add it to the cost and then I calculate the gain or loss and put it to OCI. That is why I add it to the cost. And ACM method, otherwise I am not really interested to book a gain or loss. In fact, I will rather adjust this particular cost. I will in fact amortize this cost over the period or life of the particular asset. And that is why this method is also called as the amortized cost method. So till now what I've done is I've given you the initial recognition basis of it. I've also given you in terms of how to initially recognize this particular, in fact, what will be the accounting for the difference which actually comes on the initial recognition. And I have told you in terms of what accounting methods are there and how to choose them. Now we'll have to one by one study these accounting methods and how these methods actually work out, because exam questions, numericals one will be based on this. So there are in total 16 topics which we have to study, in which next we have to talk about amortized cost method, then the fair value method, FVTPL, OCI, RNNR. Then these are the various other things which you can just quickly go through it. This is all what we'll have to discuss. So in this revision will cover all these particular aspects. This will cover up in days 109 financial instruments recognition and measurement, which will give you the whole accounting of it. 107 talks about disclosures, which is not something which is very, very significant for the exams. However, as of now, we are focusing on 109. This is part one of my revision. I will actually want some feedback from you now that in terms of one, the language, if I'm using pure English, is that fine with you? Any fine tunings which you require in these particular things, accordingly I'll share the other revision videos on this particular standard with you. But what I'm trying to basically do here is just try to simplify these particular whole concepts so that you really get one basic good idea about what is the thought process of the people who made this particular index and how they have kind of moved across. Please understand, the standard does not in any which ways explains whatever I have explained. It basically 1, 2, 3, 4, it simply starts explaining the methods. But I thought that it's very important for you to first understand as to what is the base and logic based on this is going. In fact, the standard also does not says that there are two approaches, cost and fair value approach. This is some simplification which we do so that now when we study any particular kind of instrument, you can see that instrument and then your mind really starts working like this, that okay, first let's see the instrument. Is this purely just to get interest and principal back? Cool. If not, FVTPL. Yes, then in that case, next, what is the intention of the entity? Is the model to hold only? Okay, ACM. Not to hold only, but to sell, trade only, then FVTPL. Either or, then in that case, FVOCI R. And this is the way you think. Once you get that particular understanding right in your heads, then it's very easy for you to approach the questions and then identify what should be the appropriate answer to it. This is more so from financial asset perspective. Financial liability primarily are cost-based and liability-based. Once we study these methods, we'll simultaneously study how to account it for financial liability also when we see the accounting portion for this. That will give you a complete idea in terms of how to apply these particular methods, and then we'll have to come to the special topics, which you could say is like derecognition, collaterals, modification of cash flow, very important, income recognition, embedded derivative, I'm sure. Derivative and embedded derivatives are one particular topics where you'll really need some inputs because there's some confusion among students. Not our students definitely, because I kind of harp on this very much between compound financial instrument, derivatives, embedded derivatives. In fact, some students also get confused that compound financial instrument concept in itself is only and only for the issuer. It is not for the investor, whereas embedded derivative is something which is basically altogether. It depends on the nature of the instrument. So in any which case, I'll go with the concepts and the logics here and there. When I'm taking the accounting aspects, I'll also give you the logics for those particular things. And this is basically what I want from your feedback on this particular video in terms of what you really expect from me in the next revision video for financial instruments, so that when we can accordingly tailor it to meet your needs. Thank you so much, and please keep safe from whatever is going around, and डरने की बात नहीं है पर ध्यान रखने की ज़रूर है. Thank you.